Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio. "26 years of CNBC TV 18.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me my colleagues Rima and Nigel. Guys, good morning.
Hey, morning.
Hi, good morning. Yesterday was an unexpectedly tough session for our markets. There was almost this rush for exits. And what's alarming is it's not that the FI selling was very large. Yeah. The FI sold 650 crore. It was countered by DII buying of 2,500 crore rupees. But yet, look at those numbers, 2.5% down on mid-cap, small caps.
So that's right. Interesting trading session coming up. So let's get straight to the action.
Tough spot, right? And I think absolutely tough spot with really no reprieve. And, one of those sessions where, you'd want the market to end sooner. You couldn't wait for the market to end, quicker. We've been in a tough spot, and we've kind of course, made the point for the last 10, 15 days that it's a market which is at a new all-time high on the index, on the Nifty, but broader markets far, far away, and the damage has been considerable. So let's just pull the graphics up. A brutal session for broader markets, especially coming through, and really capitulation-style selling. Now, volumes were not huge or anything, and if you can kind of look at the volume-led losers and gainers, etc., it was not a very long list on either side. But having said that, what went down sharply. And of course, there was stuff which was up as well, but more down than up clearly. 5:1 was the decline. For every one stock up, 5 stocks were lower. And as I was saying yesterday, if you're looking for one kind of pointed reason to blame, that's the mid-cap and small-cap index change, 2% and 2.6% lower. If you're looking for one reason to blame and put the blame on with regards to the carnage yesterday, there isn't any, really. No negative news flow. It's not as if, you got another shock out of the US with regards to a market sell-off or nothing, really. It's just a sense of a little bit of a feeling of being stuck, frustration. You talk to a lot of HNIs, and the feeling is that you're not making money, basically. You buy something, 2 days later you're up, and then the third day you're down. So you're not basically nothing, the continuity, or for example, the markets are not going, not trending, forget trending, but they're not really giving you a more predictable kind of price action that you'd want, especially in cases that where you're exposed or you think this is going to happen or that is going to happen. So, basically a bit of a give up is what we're seeing out there. No real big reason in that sense. Now, small cap index, as a consequence of course, all the carnage that we saw yesterday, the small cap index is the first index to break below the 200-day moving average. That is sometimes referred to as the Lakshman Rekha, but it's a longer-term moving average. For trading purposes, it's got very little use, but it's the 200-day, so I'm just mentioning that. The Nifty Bank ended almost at the 20-day moving average, just around it. 59,090 is the 20-day moving average. And the Nifty, of course, ended below the 20-day moving average, which is 26,020. These are all the levels which I'm putting out. The 20 days is all as of the close of yesterday's trading session. Mid-caps are far away from the 200-day, but they also, of course, have broken below the 20-day moving average. Some of this stuff happening. Now, this, again, something, and Rima mentioned that FIs were sellers only of about 650-odd crores and locals matched up with big buying. But the fact is that, it's the number of entities on one side and the few entities on the other side. FIs are selling, retail is selling, and you could throw in HNIs there as well, sponsors, promoters, all on the sell side. And of course, it is the local institutions, mutual funds, and that's SIP, every month inflow, which is coming in, insurance, pension money, etc., which is on the plus side, which is on the other side of the trade. But many more entities, bulk of the entities on one side in terms of selling, both primary, secondary, if you throw in promoter action, etc. as well. So that's it. The other, of course, talking point has been the lack of a trade deal. And I think that has also disheartened people more than anything else, because stock market impact, direct impact in terms of exposure to US, in terms of listed companies, etc., is low. But it's just sentimentally kind of, how can it be that it's almost been a year and India still remains the highest tariff country in the world, where we were supposed to, when we started this year, we were expected to see tariffs being the lowest. We were supposed to have a competitive advantage. It's turned into a competitive disadvantage. And more to that, Trump last night, and there was a long exchange with the press, and he kind of singled India out with regards to Indian rice into the US market, and he kind of warned of tariffs. So maybe rice companies, etc., we'll try and get some rice companies on as well. And this is right ahead of the US trade delegation led by the deputy USTR, who's going to be in India for a 2-day visit starting tomorrow. So that's the other thing. Now, just a quick wrap out of the US screen, which is not going to have that much of an influence, I guess. S&P down a third, Nasdaq down 0.14, WIX jumped up a little bit. 10-year yields, 3 basis points, neither here nor there. Oil had a bit of a dive, 2% lower, and we're at about $62.5. The Fed meeting starts today. The decision is tomorrow. And there is expected to be a hawkish cut, which basically means that, this is going to be a cut and then there'll be nothing for the next couple of months. At least that's the street expectation out there. But, I mean, global is not the problem. You need some stability to emerge here in India. GIFT Nifty is, I think, indicating a slightly, it's indicating the implied open is down 100 points lower. This is the problem, and we will focus on this over the next 1-2 hours or so. Nigel has walked across to the wall with the F&O positioning and how that's looking. Nigel, over to you.
Well, looking at the GIFT Nifty opening, I think that, going by yesterday's close that we saw and a few technical data points, at least on the Nifty, there's a good chance that we bounce from the lows of the days. But yesterday, just looking at the price action, it was clear that there was retail capitulation that's taking place, and that was the trend we are seeing in the previous few trading sessions as well. Let me explain why. The FIs, they were marginal sellers, net institutions were buyers, even taking into account the eternal large trade that we saw. Moving to the FI data, the futures space, well, the added shorts, both on stock as well as on index futures. Remember, on the index itself, the number of short additions weren't that large, but in the last few trading sessions, they have gone ahead and they have added quite a few short contracts, if you just look at that chart. Because a few sessions ago, it was at around 90,000 contracts. Now we're at around 1.4 lakh contracts. Not just that, the short positioning in percentage terms, from around 81%, that's moved to around 88%. As I always say, I like some shorts in the system, and it appears getting into this series, the FIs, they expected some kind of a trade deal maybe, so they were sitting on the sidelines, but now they believe that's not going to come about in the near future, so that's why they're piling the shorts in the system. A quick check on what the clients did, in stock futures, and there clearly signs that retail audience in there, they're selling in the cash market, and they're unwinding some longs as well. And that's precisely what happened even in yesterday's trading session, with some mild shorts getting added. In fact, if you look at the last few trading sessions, the clients, yes, they're net long, but the long positioning has reduced considerably in the last few trading sessions, close to around 3% reduction on their stock futures itself. Moving to the market breadth, it was the worst advanced decline ratio we saw yesterday, all the way since the 26th of September 2025. So that's telling you the kind of pain that we saw in the broader markets. You had only one stock that was advancing for nearly 5 stocks that was declining. And there's clear signs of retail capitulation at play, and that was replicated even yesterday. In fact, to give you a data point, in the last 2 months, the retail investors, they have been net sellers to the tune of close to $3.5 billion in the NSE cash market. NSE puts out this cash market data, so just thought I'll point that out as well. But remember, when we were going up, at that point of time, retail got overloaded on the long side. So now the hope is that maybe, in fact, they could be the ones that form the bottom as well. Hopefully that happens in the coming few trading sessions. The other point is the small cap index, that's the 250 stocks. It ended below the 200 DMA as well. But there is some hope on the Nifty, as I said earlier, because the GIFT Nifty is going to suggest a bit of a downtake. The PCR has come to the lower end of the range at around 0.6, and in all probability, it could even hit that 0.6, 0.59 in today's trading session. Because the call writers, any strike you look at, there was aggressive writing that we saw in yesterday's trading session. So to give you a few levels, the Nifty first, if it fights back, it needs to get past the 20 DMA. That'll be the near level of resistance. Yesterday's low becomes important, And if that breaches, then you're looking at the 50 DMA. So that's going to be very, very important. You don't want this 25,800 mark to get breached on the downside. I think there's a strong possibility we see a bit of a pullback today just on the Nifty. The Nifty Bank, the good news is yesterday it did defend at least the 20 DMA on a closing basis. All eyes are going to be on a couple of other big boys. Reliance Industries, in a market that was weak yesterday, that held its own. Needs to fight back even in today's trading session. And the tech index, the last 2.5 months, the tech index is up close to around 15%. It's outperformed the Nifty and most global markets as well. In the last, from the September lows, if you just take a look at it, a 15% return that we're seeing. So the gift is suggesting a soft start. Maybe we see a bit of a fight back, given that it's weekly expiry contracts as well today.
Indeed, thank you very much for that. Moving on, the India-US trade talks have begun under the tariff cloud. President Donald Trump signaled the possibilities of new tariffs on Indian rice. What adds weight to the statement is the timing, because this comes ahead of the US trade delegation that is arriving in India today for a 2-day visit. Is this going to be a policy measure or perhaps just a pressure signal ahead of talks? We'll wait to see. But for now, listen in to the US president and what he had to say.
Tell me about India. Why is India allowed to do that? They have to pay tariffs. Do they have an exemption on rice?
No, sir. We're still working on their trade deal. So
yeah, but they should be dumping. I mean, I heard that from others. So you can't do that.
There's a WTO case against India now.
Give me the countries, if you could. Go ahead. India. Who else?
So India.
Mark it down. What'd you say?
yes, sir.
India, Thailand, China into Puerto Rico, not into the continental U.S., but into Puerto Rico. They've bought the largest brands at retail too, right? So they have an incentive to subsidize their products so that they can keep it on the shelf.
Yeah, who did that?
The Indians own the 2 largest brands.
All right, then we'll take care of it. It's so easy.
But the spotlight on names like KRBL, LT Foods. Asia, by the way, is a mixed picture. More of a wait and watch ahead of the 2-day FOMC meet, which begins today. But there are no big moves on the way up or on the way down. The GIFT Nifty, as we pointed out, down 100 points. The Hang Seng is now slipped. That's down close to about 66.6%. But it's going to be a busy day. Will the market weakness continue? The Nifty weekly expiry is today. The US Fed meeting starts tonight. And plus, as we said, the US trade team comes to India for negotiations over the next 2 days. And plus, all eyes will be on Interglobe Aviation. The DGCA and the Indigo top team will be meeting at 11 o'clock. Lots to watch.